Good morning to all traders and welcome to this week's last market insights video. Today is the non-farm payrolls, the payrolls everybody's been expecting to since the Fed turned dovish. Are the numbers going to show us to validate that the Fed will cut in July 31st, which is the next FOMC meeting, or are they going to support the dollar? Well, the ADP came out. It improved, but it came, I think it was around 50K below expectations. So it will be a very interesting one to watch for the day because this is likely to set the tone until the next FOMC meeting at the end of July. Now, markets were actually quite boring yesterday, right? Because everybody's expecting for NFP. Most of the pairs just traded within a very tight range. The thing is that yields, and mainly in Europe, fell, okay? And that is because inflation in general is not picking up anywhere, and there is actually also signs that it's not going to peak. And this is very, very troubling for not just Europe, but for the markets, for global markets in general. Now, the thing is, we've also had a very poor retail sales yesterday. That was a low to below growing levels, recessionary levels, okay? So there was no expansion, there was actually a contraction. Now, obviously, Euro didn't move much, okay? Because we are expecting the NFP and everybody is focused on the result of course, the headline number, then the unemployment rate, but the most important for this one will be also the wages growth, okay? If we remain above 3 year on year, okay, we are at 3.1. If we remain above 3, this is still a very good figure. So forecasted value, it's probably going to keep us above the 3 line. So I would pay attention if that comes to 0.2 or 0.1, then this will be very negative for the dollar. Of course, it's a mix of data always. We always need to look at the headline numbers. This is always the first reaction in the markets. Despite that, we'll have the Canadian one as well, and later in the session, IVPMI. But I want to focus on euro dollar and dollar yen today. We have the German factory orders coming out very, very soon. They're not likely to move markets much, okay? I'm expecting all the majors and all the minors to consolidate until the NFP data are released. So starting with euro dollar, I want to go on the 4 hours chart. We've been moving outside this channel, okay? We said about correcting, ending this correction around 111, okay? That's a long-term view. Since that, we've got wave 1, wave 2, and looks like we're heading for wave 3 now, around 115. Then we'll probably have a correction back to previous highs, and then looking forward to 117 or so, probably by the end of this year. Obviously, if the dollar keeps weakening. Now, we had some supportive signals on RSI and MACD, and that's the reason we keep doing higher highs and lower and higher lows. Now, over here, we are very, very, very good to a retest level with this descending trend line, okay? And I'm expecting prices now maybe to move a little bit lower if we go just a little bit closer. Move a little bit lower and then start moving back up. Now, on the 1 hour chart, we see that we are moving in an ascending channel, okay? We've crossed below the median line to complete wave 4 over here, okay? We're still in a correction in the short term. And now, it looks like we're trading within a triangle. What I'm expecting to happen, despite the fact that we hit the 50 Fibonacci extension at 1260 or so, I'm expecting a throwback, okay, down here. That would complete wave C around 112.25 or so for a deeper correction. and then at the same time would have a confluence between second extension, Fibonacci retracement, as well as hitting this trend line bottom. And from here as well, we can start looking for prices to go higher. Obviously, that might not be the case because of the NFP. We could just as well just see prices moving up all the way without a deeper correction. But in the medium to long term, this seems to be a bullish scenario nevertheless. And down on the 30 minutes, after completing this impulse wave to the upside, okay, we are now into wave C, okay, of this correction. Within the correction, we have another impulse that seems to have only completed 4 waves. And that is the reason I'm expecting another move to the downside, because that would also give us a very nice retest level to this long-term descending trend line, which is part of the long-term triangle, okay? And from here, you can start looking for prices to move up. Now on the dollar yen, on the 4-hour chart, again, we had a similar pattern after this high back in last May, it looks like it. We've had, we started correcting. This is an ABC. That is one scenario. The other scenario would be that this turns out to be 1, 2, 3, 4, 5 impulse wave to the downside. That could take prices below the 106 level and towards 104, 105. Okay. Now, for that to happen, of course, we need to remain below 109 because anything above that price would invalidate this as wave 1. I mean, most of the times, you know, the thing is because we're in the longer term, we could have a false break over here, okay? So we could go up to 110 or so. I wouldn't be surprised. But once we cross the 111, that would be the 100% invalidation that prices are going to go lower, okay? But I'm expecting prices now to move within this ascending channel and start looking for sales around 110 for wave 5. Now down on the 1 hour, how this is probably going to play out, since we've finished this correction here with an impulse in the shorter term and moved up with another impulse to complete wave A of this correction. This move to the downside gave us the opportunity to draw a nice ascending channel. So the prices are remaining within very close to this bottom trend line of this channel, but at the same time they seem to be completing actually very soon this corrective triangle. Now prices look bullish because of that, okay? So most likely going to move up for another wave around 109. NFP dependent, of course. RSI and MACD both give us bullish signs. The thing is, I wouldn't be surprised if we've had a throwback as well over here as on the euro dollar, okay, for prices for a deeper B wave, okay, down here, and then start moving up, and then from there, of course, in the medium to long term, we're looking bearish. So attention on the NFP numbers, okay, as we said before, and focus on mainly the wage growth. If it is above the 3% year on year, we're still looking for FOMC meeting to be not as dovish as markets anticipate. So thank you for watching for another day, and don't forget to sign up for our NFP webinar, live NFP webinar later in the session. I would like to turn your attention a bit as well on our blog. Is where we'll cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs.